All right, so first off, I want to say that I am not a professional financial advisor. What I'm saying are just my opinions based on what's been happening in the markets. But if you want actual financial help or advising, go find an actual professional financial advisor. Just take this as entertainment. All right, so the markets are down. They've been down for a little bit, as in a couple days. So everybody who has been trading for since quarantine started, it's probably freaking out because this is the first correction since quarantine or September if you bought tech stocks. I'm not going to tell you what to do, like I said, but I'm going to tell you what the traditional, conventional theory as to why stocks are going down. Okay, so think about it this way. In traditional monetary theory, when the economy is tanking, as in there's not a lot of production of goods, the Fed, also known as the Federal Reserve, which is the central bank of the United States, will lower interest rates to spur the economy. So think about it this way. When the Fed raises interest rates, people are going to want to invest in risk-free assets, which in this case is a government-backed bond. And who's responsible for those interest rates? The Fed. And the Fed interest rates literally affect everything. If you have an adjustable mortgage, the Fed's interest rate basically dictates your interest rates, because what the Fed does is not only do they dictate the interest rate of money, which is basically like the price of money, but they also dictate interest rates to banks called an overnight rate. And basically it's the cost of money for banks to borrow money from the Fed, because the Fed is the bank of the banks. When that interest rate rises, the bank will also raise interest rates, and when that interest rate falls, the bank will also lower interest rates. And you might be wondering, wait, better interest rates mean that I get more money in the bank. Like if I put money with the bank, they'll give me higher interest rates. That is true, but it's so marginal that it honestly doesn't even matter unless you have like $1 billion. But if you have $1 billion, then you wouldn't be listening to me. And if you are listening to me and you're a billionaire, think about sponsoring this channel. No, what raised interest rates do is that it incentivizes people to save more money, because everything becomes more expensive. Your mortgage becomes more expensive on your house, and your car payment gets a lot more expensive. And for investors on the investor side, like people who are old, who are investing in these bonds, they basically are putting their money into the government-backed bonds, basically, and the government is taking back their money. And all in all, just slows down the economy. And of course, there's risks to that, right? If the interest rate is too high, like in the 1980s when it was 15%, just for comparison, the rates right now are like non-existent. They're like 1%. Then there could be a huge recession or depression. On the other hand, if the interest rates are too low, then there could be a lot of inflation with our currency, the US dollar. That is traditional monetary theory. And like I said, back in March when COVID hit, the Fed had a 2% interest rate, and they cut that down to 0%. Technically, it's like between 0 and 0.25%. Basically, it was nothing compared to what the interest rate was before COVID. And that was because, obviously things were closed and there was not a lot of business and the economy wasn't running. So the Fed was like, okay, we're going to spur the economy by cutting down interest rates. Now, that comes with its own set of problems, things like liquidity traps, and I'm not going to go into it because unless you want me to, which I'll make another video about it, but I'm not going to go into that. But basically, if they cut interest rates, there's a possibility that the economy will not keep chugging along or get better. But in this case, it did, and what happened was people started piling into stocks. I mean, literally, if you look at what is happening... If you look at what's happened in the stock market since March 2020, almost everybody has made money. Just look at a graph, think of any company, just type in company name stock, and look at the graph from March 2020, and you'll see the stock prices like going up a lot, like tons. And that's because of a bunch of other reasons, but part of it is because of lower interest rates. Fast forward to August/September of this year, and interest rates started going up. For whatever reason. I mean, people were scared of inflation, people thought the economy was getting better, so interest rates for bonds and treasury yields were going up. And for one reason or another, nobody really knows, stocks tend to go down when interest rates go up. Like I said, nobody really knows. There's not like an actual reason behind the correlation, but some people think that, when interest rates go up, the economy's going to slow, I'm going to sell my stock. Other people think, when interest rates go up, the risk-free rate to invest in bonds is a lot more than what these stocks are worth, so I'm going to sell my stock and pivot into bonds. Right, there's like a million different reasons why people would pivot out of stocks when interest rates go up. But the bottom line is, historically, there's been a correlation between rising interest rates and lower stock prices. On top of that, the stock market is historically a lot more quote-unquote extended than it usually is. Notice how I didn't say overvalued, because like I said, nobody knows. Nobody really knows, because if somebody knows, that means they're getting very rich. But just from a numbers perspective, the S&P, like all 504, in this case, stocks that are in the S&P 500, usually trade at 15 times the amount of profit that they make. Right now, within these past 3 months, the S&P is trading at approximately 25 to 30 times, which is double what it usually trades at. So all of these factors combined are incentivizing investors, big ones and small ones, to pivot out of their stocks, especially tech stocks. Which is why if you've invested in anything that has to do with tech, like Apple, Microsoft, Amazon, Facebook, Netflix, Alphabet, which is Google, Arc, Tesla, any of those stocks, you have experienced a downturn within the past few days. Will this downturn become worse or better? I don't know. If I knew, I would be making a lot of money. And to be quite frank, nobody knows. Right? Like, the best thing the people in power can do is to maybe prop up the stock market for a little bit. Like yesterday when Jay Powell said that he was thinking of keeping interest rates low because there wasn't a lot of signs of inflation. But if you want like an objective answer, as in if I had to put all of my money on an answer, that answer would be nobody knows. Of course, there's a lot of people who can guess with a lot more background and education than me or the regular average Joe, because they've been in finance forever and they've seen the economy in basically every single state of existence. But to be real, nobody knows what's going to happen. So if you want financial advice, don't watch these YouTubers who are not financial advisors. Go and seek out a financial professional if you want like advice on what to do, and ask them for help. The short and sweet answer of what's happening basically is interest rates are going up, people are pivoting out of stocks. Whether that means cash or into other securities, I don't know. Anyway, I just wanted to say that because I know a lot of people are freaking out right now because a lot of people are invested in things like Tesla and SPACs, which is another nightmare that I'm not going to talk about right now. So I just wanted to add to the conversation in a honest and truthful way, in a way that doesn't deceive people. So if you don't like being deceived and you want honest conversations about what's happening in the markets, subscribe and like, and let's have that conversation. Also, if you have any other topics that you want me to talk about, I'm very happy to talk about that with you. Just put it down in the comments because I don't know what people want. Anyway, okay, bye. I'll see you guys later.